Oh boy, high prices and inflation continue to top the minds for many of us. The current economy has many under financial strain. Our financial expert Paul Hood from Hood CPAs is working overtime right now trying to keep up with all of this. I know it's a lot, isn't it? Several families are looking for ways, of course, to increase their cash flow right now. But for many, going into debt is unavoidable. What is your advice, Paul, if a family is going into debt to make ends meet? What kind of options are the best options right now?
Well, you know, Brian, it's a difficult time. Things are more and more expensive. The great news, though, is there's a shortage of workers. So it's a great time to work on yourself, to try to upgrade the position you're in. Put yourself out there on the job market, because right now it really is. Other than at CPA firms, we don't want anybody to know that, it is a employees market. You know, we are paying people and hiring people for much more than we had to 3-4 years ago. So it's a great time to think outside the box and see what other roles you might want to get involved with. You know, if you have to pay the bills, you have to pay the bills. So if you have to go into debt, the main thing is not to go into debt for silly things. You know, it's not a time to go buy that refrigerator at Lowe's that talks to you and tells you when the milk is empty. It's, you know, if it's scripted and it's planned and you have a plan to get out of it, you got to do what you got to do. But I'm telling you, when things are down is a great time for you to start looking for opportunities, because it is an employee's market right now.
Another positive, too, is remote work. We still continue to see that as an option and grow.
That's right.
We have a couple of viewer questions. Want to jump right into the first one. Comes from Rachel this week. Rachel says that she received a promissory note for 10 grand. Is this something that I can write off on my taxes? She wants to know.
So it really depends, Rachel. There's two ways to look at that. One is as a bad debt. Now, if you're not in the business of loaning money, Brian, the IRS is going to say that's a personal thing. You're not in the business of loaning money, therefore it's not a deduction. Now, if we could argue that it was an investment, then she potentially could write it off as just like if you buy a stock or Bitcoin and it goes through the floor and you have a loss, then you can write it off. Now, the challenge with a note or an investment in a small company is, when is it uncollectible? When is it negative? I mean, if you invest on the stock market, you can see this, here's a value. But when you do something like that, people tend to maybe pay that back a few years from now. So the key is if she can prove that it is truly uncollectible and it was a business investment, she can write it off.
45 seconds on the clock. Last question goes to Jeff. I own 12 rental properties and have created an LLC, registered with the state under my wife and I's name, but failed to file with the IRS. Should I set up a partnership and file a separate tax return to the properties are not connected to our personal assets? Thoughts?
So there's a couple sides to that question. There's the legal side and the investment side. The main thing people need to know is the IRS doesn't recognize an LLC. So we can tell the IRS this LLC is a disregarded entity, doesn't file its own tax return, a partnership or corporation. In this case, you probably should take the position as a disregarded entity, just put those rental properties on their personal return, because if they try to file a partnership now, tax return, there'll be a big penalty.
All right, great questions came in throughout this week. If you're sitting on a financial question you want us to talk about next Monday, you can send yours in by email right now to moneymonday@griffin.news. We're back on the other side of this break.